In this episode, you're going to learn how to save yourself from getting your mortgage application denied and putting your financial future at risk. Now, over the course of the last 4 videos, you've learned that the seller of a house can legally keep your deposit and sue you for even more money if an underwriter denies your mortgage application and you fail to close on that house. You also learned who an underwriter is, what their job is all about, the documents that they inspect to help them decide if your application is good or bad, as well as the main reasons why they can deny your mortgage application. Now, half knowledge is more dangerous than no knowledge, so click here, should be here or here, if you haven't watched those videos. The reason why I'm saying this is that it's scary that every single professional that you're going to be working with expects you to know these things, meaning that the stakes are very, very high, so please watch till the end. And without wasting any time, let's go. Number 1, build your credit. Do not put in an offer to buy a house, apply for a mortgage, or even look at a house in a lustful or covetous manner if you do not have a good credit history or you've not even had a chance to build your credit history. The underwriter needs to see that you're good at paying your existing debts before giving you any new debt for you to repay. Number 2, understand how down payments work. Now, I made an entire video breaking down how down payments work in Canada. Click here to watch it. It's somewhere here. I keep on missing it. Not understanding how down payments work leaves you open to miscalculations that quite a few people might not catch until it's too late. So for example, if you borrowed your down payments or acquired your down payment in a way that the underwriter is not going to like, that's going to get you in trouble. So please educate yourself just so that if you ever meet someone that doesn't have your best interests at heart, you know enough to protect yourself and your financial well-being. Number 3, understand your employment status. Underwriters in Canada love full-time permanent staff. They have predictable and easily verifiable income. They represent stability, which makes their job a whole lot easier. So if you're buying a home as a self-employed person or as a contractor, understand that things will get complicated very quickly. You're going to need more professionals to help you put together your mortgage application in a way that will not upset the underwriter. Full-time permanent staff, don't relax just yet. There are also situations that can get you in trouble, like applying for a mortgage while you're still on probation. You need to understand how your current employment status can affect your chances of getting a mortgage, so you can either avoid these tough situations or prepare yourself adequately to handle them. Number 4, keep your bank statements squeaky clean. Underwriters can kill somebody if they find irregularities like large unexplained deposits, income that doesn't match your occupation, inflows from questionable sources, or even not just being able to prove where your down payments came from. To assess all these things, they will normally ask for 90 to 120 days of bank statements, or even more in certain cases, just so that they can go through it with a fine-tooth comb. They can reject your down payment outright if they think something is wrong. So watch this video right here to learn about down payments, how they work, and why they can be rejected. In all, you want to keep your bank statements as free of difficulty as much as possible. If you can, make sure you set aside your down payment in a separate savings account, one that you don't use for your daily transactions for the right amount of time. This way, things appear as simple and as straightforward as possible when the time comes for the underwriter to do their review. Now, last but not the least, number 5, never overpay for a house. We're slowly transitioning into a seller's market. The pressure is getting worse and worse and worse. People are going to want to bid and overbid and overbid. House prices are already starting to rise because the Bank of Canada has paused interest rates, and it looks like they are going to start reducing interest rates maybe towards the end of the year. And because of this, a lot of buyers are becoming more confident. Now, if you get caught up in a bidding war and you put in a $700,000 offer for a house that was listed for $600,000, and your underwriter believes that the house is only worth $500,000, my G, you've entered one chance. Because you'll have to come up with the difference in cold, hard cash. So always request for something called a comparative market analysis from your realtor. It's called a CMA for short. And if you're not satisfied with that, and you don't mind spending a little bit more money, work with a home appraiser to help you figure out what a house is really worth in the current market. Now, do this before you pull the trigger and put in an offer, just to save yourself this type of headache. Now, there are many more things to understand, but this video will be way too long if I shared everything all at once. Everything Everywhere All at Once. I love that movie. But if you understand the gravity of the situation and you really want somebody to hold your hand and walk you through this process, my contact information is on the screen right now. You can find it in the comments or in the description. Now, if this playlist showing up on the screen right now has helped you to avoid wahala, please subscribe so I know to make more of this type of content, and please also share with your friends so they can protect themselves as well. Thank you very much for watching. See you in the next one.